Welcome back to the channel, Crypto Trend Trader, with a quick update on quite a few assets today. We're going to take a look at the DXY dollar index, TNX 10-year treasury, Bitcoin, Dogecoin, and silver. Going to keep this one relatively quick. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Just a little bit of fundamental / technical talk before we get rolling. Obviously, Biden and the new presidency have been talking about quite a bit of money going out. They're basically going to be forcing through the $1.9 trillion plan. Fundamentally, what you would expect with, a crazy amount of spending and massive deficits, essentially like the devaluing of the dollar. Interest rates going to stay down low. Janet Yellen is the new secretary of the Treasury. So essentially, she was the old Fed Reserve president, which is what Jerome Powell is now. So you would expect the two of them to work hand in hand, essentially to make sure that the basically that the rates don't rise as best they can, make sure that interest rates stay low, and they can essentially just print as much money as possible. Therefore, you would expect, obviously, 10-year, Treasury yields or, the DXY to drop. You would expect all forms of assets to rise, which is why we saw all new highs in the stock market, basically across like all the indexes, especially seeing like the small cap businesses, index funds go through the roof as basically like people are moving into some of the, I want to say like less inflated assets, less overvalued assets, some of the stuff that's kind of been sitting around a little bit. So obviously we saw a huge burst in Bitcoin. We found some support in silver, and Doge is on the loose again. Elon has officially come out and said that he did buy $1.4 trillion, $1.4 billion worth of Bitcoin on Tesla's balance sheet. So once again, you see him, basically like pumping his bags, pumping his investments. Which is what you would expect, like the richest man on earth to do, is to buy something and then tell everybody about it and pump it up with his followers. So let's get started with the dollar index, DXY. So we basically, once again, been traveling down in this channel for quite a while. Found support on the heartline, started to get the breakout to the upside, did exactly what we said, came up to the 89, topped out, found resistance, came back down, and now here we are back at the top of the channel. And what we're expecting to happen here is one of two things. We either find support at this top of the channel right here and then get a continued move to the upside, with our next target being the 200 exponential moving average at 93, or looking at it fundamentally, this looks less likely to happen. This looks more like it's going to be a failed rally outside, of this, and then essentially break back down inside. And again, the reason I say that is it's going to be hard for the dollar to stay strong against other foreign currencies, when they're printing, a mass amount of these things. So even though you have like, the euro or, Canadian dollar or, whatever else, also doing the same thing, the dollar is basically being overinflated faster. So think about it as like total currency in like, money supply, for each country or, each currency. So, if the dollar goes up per year by 25% more currency, we've essentially devalued the existing dollars by 25%. Because we created 25% more, so those same dollars buy less. And then look at, like, say, the euro, for instance, or Canadian dollar, or the yen, or whatever, and then you look at the total supply of those, look at how many were printed in the 1 year period, and if it is more than 25%, you would expect the dollar to rise in relation to those. No other factors taken into account. If it's less than 25%, you would expect the dollar to fall in relation to those. And then obviously the DXY is weighted, heavily towards some and not as heavily towards the other. It's like, I think almost 60%, over 50%, almost 60%, in relation to the euro. And then each of the other one is like slightly smaller, to almost nothing. I think some are as low as like 4 or 5%. So, so basically what we're saying here is that if the U.S. continues to devalue their currency faster than other countries, we would expect a continued fall in the dollar, which is what we're seeing at this point in time, with the 1.9 trillion, with the over $4 trillion deficit. I think last year, I think we could expect probably like somewhere between a 6 and $10 trillion deficit in government spending this year, especially with some of the new like plans they're talking about and everything. They can raise taxes as much as they want, but the way the tax code is set up, the people who have the most money pay the least taxes, and you're only going to be able to extract so much money out of like the middle class when the middle class is the one who's taking like the brunt of this pandemic. So essentially, like, you're trying to say that you're going to print a bunch of money, give it to all the low income / like low middle income people, and then you're going to tax it back. But the low income people don't pay taxes. They basically get to write everything off because they don't make enough money to pay net taxes. And then the middle class people, basically get maybe small amount of the stimulus or whatever, but they're the ones who have taken like the mass hit to like the small businesses. They're typically the ones who are like middle earners, 70,000 to 150,000. So they're in like the middle tax brackets or whatever. So essentially, like, they're going to pay more in taxes and get pushed down into like a lower class. And then meanwhile, you're rich and everything have taken the least financial hit throughout the pandemic and everything, and also pay like the least taxes. So you're not going to really get more taxes out of them. And if you do, you're going to get slightly more, but they have the best lawyers. They have the most businesses, the ability to write off the most stuff. So they actually pay like the least amount of taxes. So essentially you're just siphoning any additional money from the middle class, and the middle class just doesn't really have extra money to give right now, especially not to fund, an extra like $4 to $8 trillion in spending. So we're just going to see these deficits go through the roof, and, fundamentally you would expect to see this just roll over and die. But that's fundamentals. We'll have to see where the technicals play out. We could easily find support here and get a pushback to the upside, and throw everybody for a loop. Markets often do the opposite of what everyone thinks. So while everyone thinks that the dollar is going to continue going lower and, go to zero tomorrow, sometimes the contrarian trade is the one that gets everybody on the same side, gets everybody short on the dollar, and then next thing you know, you get a strong burst to the upside, as essentially like the GameStop trade happens, and you squeeze out all the shorts. So we can go over to the 10-year Treasury. Exactly what we said happened. We came up to the 377 first time, topped out, sold back off, found support, did not cross the 8 and 21 to the downside. So the trend to the upside is still intact. Once we crossed above the 200 exponential moving average and 200 simple moving average, and then the slope switches to the upside, this is basically the beginning of an uptrend in the Treasury. So we can still come down here and even retest these levels all the way down at like 0.75, and stay bullish on this asset, on the daily, on the longer time frame. We took out the high right here from the initial push up, and then, essentially are consolidating. We did get a violent sell-off or rejection, which you would expect. What we want to see is essentially, is it going to come down and, put in a new high? So we are essentially right now developing a trend to the upside. And, depending on how you do this on the daily, how you look at this, this is basically what we're paying attention to. We can turn off the moving averages so it's a little more clear, but, this is what we have now. We were in a massive long-term downtrend, selling off since basically the top was back here in October of 2018. We've been selling off violently. And now, does this have to come all the way back up and take this out and enter a macro uptrend? No, but we're in basically a bullish retracement of the bearish dump. So what we're paying attention to is how far of the bearish move are we going to retrace? How much of this move are we going to get back before we continue to the downside? And like obviously something can only go so far to the downside before eventually you would expect like, the equivalence of a dead cat bounce, which is what we're looking at now. So if we take a fib from the top there to the bottom here, we're at that 0.5 range right now, a 50% correction, at which point in time we can now just sell off and keep on going back down and go to zero, go negative, whatever. Definitely a possibility. Or we could continue on and make it up here to like the 618. So that's basically what we're paying attention to now, is how far is this trend going to carry us to the upside? Because if we get back to the 618, that's going to be 1.45%. People were already getting scared by this and the dollar breaking out of that long-term channel. So are we going to double top right here, get that rejection, sell off through this trend line, and then come back down here, put in a higher low? Back down here we had the 0, found some support after the 0, came back down, found some support at the 236, pushed up, found some support at the 382, pushed up. Are we going to find support now at the 0.5 and then continue to push up? Are we going to come back down here to the 236 or the 382? That's what we're paying attention to. So essentially that's what we want to look at is, does this channel, does this, break to the downside, or do we continue to go to the upside? Because that's going to tell us then, in which case, are we going to get, this is essentially a bearish pattern. Typically what happens is you continue on, and then finally, let's say this is the top right here, for instance, and we come back down here and we break through this, we're going to get our measured move down. The measured move of the channel from bottom to top is going to take us back down to like the 382, slightly below it, find support at that previous little consolidation range, at 1%. So that's what we're paying attention to right now. Are we going to break through this and come back down? Are we going to continue to the upside and get the break later on? When we do come down, are we going to find a higher low right here and continue this micro uptrend inside of the macro downtrend? Or are we going to continue down and, the 0.5 was the top? That was the retracement of the bearish dump, and then we're going to continue down to lower prices. So that's what we're paying attention to right now. The dollar and the treasury yields are probably going to move, in confluence together, in concert. So that's what we're paying attention to, is what are these two things telling us? Again, you would expect that people are not worried about this tiny little yield on a treasury right now, because they're not going to flee to safe haven assets while like everything else is making massive moves, all-time highs, moving to the upside. No one is thinking to de-risk right now while we're moving powerfully to the upside. So and then obviously when it happens, this thing bursts to the upside, squeezes everybody out, crushes everybody. Same with like the dollar, bursts to the upside, but more likely than not, we will continue inside of the pattern until we don't, and typically this pattern will break to the downside. So, and then obviously with the big spending coming out, with the government handouts coming out, you would expect obviously these two things to weaken. So now let's look at Bitcoin. This is exactly what we were talking about. Everybody always wants to try to call the top and get bearish on this thing. And what did we say? We're going to come down here and see, we got the cross to the downside, but we found support multiple times on the 50-55, crossed it back to the upside. This was Elon's little, I don't know if you want to call it, him pumping his bags, him letting people know ahead of time before price shoots up, before the news comes out that he did buy Bitcoin, whatever you want to call it, whatever you want to consider it, basically that saved this cross to the downside right there. So basically this buying through this area, this massive amount of accumulation now is very clear that this was essentially a consolidation accumulation pattern. So by saving the 821 cross on the daily and continuing back, there was no reason to get bearish on this thing. Once we put in 2 green histograms, like I always say, on the TJD, TDMACD, and we start coming back up, once we flip that slope back over blue, everything is telling us upside. Everything is telling us continued upside. Crypto trend trader is all about trading with the trend. Go with the flow. Don't try to swim upstream. Just coast on downstream. Float on downstream like the lazy river. Jump in your little inner tube and just let the current take you. And right now the current is taking us to the upside. And people are talking about what's your take profit strategies. When are you going to get out of this market? What are you looking for tops? I'm looking for temporary tops. Through like Fibonacci extensions and measured moves and stuff like that to essentially hedge my positions. But I'm not looking to go net short in this market as long as we're continuing to the upside. And that's going to be the case the entire bull run. As long as these moving averages are staying crossed to the upside, as long as we are in a clear uptrend. I mean, the last time the 8 and 21 crossed negative was back here at 10,500, and from 10,500 we moved up to 42,000. So this same exact thing happened again. We sold back down through it, found support. So when is the next time I'm going to get bearish or consider, consolidation taking place? When these moving averages start to look like they're going to cross back over, and once again, if we got a 4x move from 10,000 to 40,000 right here, and we came down here to 33,000, is it unrealistic to think that we're going to 4x from 33,000? Are we going to make it to $100,000 or $120,000? It looks probable right now. It's not a great way to measure targets to the upside, but even if we 3x, that's $100,000 Bitcoin. So you don't want to get overly bearish on this thing because it looks overvalued to you because you started following it at $800 or $3,000 or $10,000. That's not up to you when the market tops out. And the most important thing is to just trade with the trend. And right now, the way the dollar looks, the way all the other currencies around the world look, the way the treasuries look, the way the markets look, everything is inflating up in a bubble. And just because you can spot a bubble when it starts being formed doesn't mean it's about to pop. Because if you've ever watched one of those videos like on YouTube or something like that where they blow some massive bubble, you could literally start blowing a bubble and say, oh, that's a bubble, and then it gets 1,000 times bigger, 100,000 times bigger. It gets big enough a person could fit inside these bubbles. They blow up so big. Just because you see a bubble forming does not mean that the top is near. So if you're worried about a 50% sell-off, well, we're already up 50%. So you were so worried about, this 32,000 right here, let's say, up to 48,000. 32,000, half of that is 16,000. 32,000 plus 16,000 is 48,000. So if you were right here and you were worried about a 50% sell-off, so you didn't enter a position because Bitcoin was overvalued, now we're up 50%. So now even if you were right and we get that 50% sell-off from 46,000, 48,000 rather, what's that take us down to? It takes us down to 24,000. So you were so worried about the sell-off, you missed the 50% gains to the upside when you would have had this whole entire time to sell your position still in profit, but you were too worried about it dropping down to 24,000. So, that's why we don't call tops. We like to look at extensions, look for potential areas to temporarily top out, but trade with the trend, stick with the trend, go with the flow. That's what it's all about. So now let's see how we picked out our targets here. We took the top right here at 42,000. We took the bottom right here at 28,000, fibbed from there. And then we got our first extension target, which was the 1.236, which is where that first burst candle took us up to 45,800. Potential area to top out. So far, this does look like a bearish daily candle, but it's obviously too early to tell. From that point, we essentially consolidated and then got a push up higher to the 1.382. We fell slightly short. I'm still not putting that out of the cards, saying that we can't get there, but we'll have to see. Do we find support here at the 1.236? Do we come back down and test the breakout, at the 100 level, back at 42,000, and then get continuation to the upside? That would probably line up with the 8 moving average on the daily as well. Definitely a possibility. We are in the bullish control zone. We are at relatively high areas. Right now, if this were to just top out right here and start selling off, and this starts looking like a top on these indicator oscillators, we're going to start looking at bearish divergence right here. And then you could potentially say, oh, wait, maybe this is going to be the all-time top of the trend. But it's just way too early to tell that stuff. You pay attention to bearish divergence and look out for it, but you don't want to use it to just call tops and go all in. You want to use it to hedge your position so you don't give back all your gains. If we continue to the upside here, the 1.5 target is going to be that 50,866. 1.618 is going to be 53,155. Or if we zoom way out right here, these are the targets from the previous all-time high. I did the exact same thing from $20,000 way back when down to $3,000 way back when. And then this is going to give us our extrapolated targets. The first one was 1.236. The second was the 1.382, which is where we topped out the first time when we hit 42,000 and then consolidated. So that's basically where we're at now of this smaller move that we're inside of, that we were just talking about. We're at that 1.382. We came down, sold off from there, and then burst back to the upside and almost made it to the 1.5. The 1.5 was my target at 50,000. So I don't think it's unrealistic that we get some continuation here and we make it up to that 50,000 range. 50,000 has been the target for some time, and then after that, our next main target to the upside is 62,250. So again, we're going to keep watching these things. Typically when you hit these targets, when you start getting these fib extensions, the 2.618 is like the most common fib extension. And the 2.618 is at, and don't get overly bullish on this thing because it could take a while. It could take, the rest of the year. It could completely not even come close to there. But the 2.618 target is $395,000. It's $400,000. So, it's not unrealistic to think that we're going to get the 2.618 extension of this little move here in orange, of just that little pullback we had right there. That's going to take us to $75,000, $77,000, and then the 2.618 of the entire move from 20,000 back down to 3,000 way back when, from the top of 2017 to the bottom in 2018, that's going to take us up to 400,000. So, that's not an unrealistic target for this bull run. Again, don't get overly bullish right now. Don't get overly bearish. I do not understand why people look at assets that are in clear, powerful uptrends and don't want to buy them. I would much rather buy an asset on the way up when it's in a powerful uptrend than buy it on the way down, hoping that I'm picking the bottom. Because if you just dollar cost averaged in any point in time during this whole entire trend from $4,000 up to $20,000, from $20,000 up to $40,000, if you dollar cost averaged in anywhere along the way, you are in profit because we're once again at all-time highs. And the rule for all-time highs is assets making all-time highs continue to make all-time highs until they don't. Okay, and that sounds crazy. They make all-time highs till they don't. Well, how does that help? Well, what that means is that if you look at any one of these candles along the way, any one of these daily candles, once we broke out of $20,000, every single one of these all-time high, 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 all-time high. You get the point. You continue to make all-time highs until you don't. So until this thing sells off and we actually top out, it's only going to top out one time and not make an all-time high and then go into a downtrend. Until then, every single one of these candles is an all-time high, with the exception of a couple of like the consolidation candles, but we're in an uptrend. Dollar cost average into an uptrend, not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please, research, trade responsibly. If you're too worried about making a buy at these prices, you're probably buying with too much. If you're going to put in $10,000, but you say, I can't afford if it goes down 50% right now, then don't put in $10,000. Put in $1,000, because you're not worried about losing $500 temporarily or taking a drawdown of $500. If $1,000 is too much, put in $200. If $200 is too much, put in $100. If $100 is too much, put in $10. But if you continually put in $10 once a week or whatever, your $10 has grown exponentially. And then on top of that, every other purchase you made along the way is also in profits. And then you end up with more and more of whatever that asset is along the way, rather than trying to pick out the absolute top and, missing out the whole way. Because there's FOMO, fear of missing out. There's also, I don't know, like FOMO, also like fear of not making gains. Like, if you sit here and start hating Bitcoin because you're not buying in and it keeps making all-time highs, you're in the space, you're involved in the space, this thing is an uptrend, and yet you're too afraid to buy because you don't want to take a loss. Just you're trading with too much, or you don't have the money to invest, or, just decrease the amount. If $1,000 is too much, go to 100. If 100 is too much, go to 10. If 10 is too much, sell something on Craigslist and buy some damn Bitcoin along the way up, because you're just going to end up hating this asset and regretting it if you don't. So, well, anyway, it's not financial advice. I'm just telling you the mentality of, fear of missing out and trying to call tops and trading with the trend, etc. Here we got Dogecoin. Everybody's loving Dogecoin. Once again, Elon's pumping it up. Doge is trying to switch its brand and, come out now and say it's going to be like a functional payment network, whatever, that's fine. I'd be careful with it. Like, I think over 25% is held by a single wallet. Over 50% is held by 20 wallets or 20 people. So when this thing crashes, it crashes big. But in the meantime, there's massive amounts of gains to be had. So what we're looking at now is that previous low down here after the initial pump at 0.6 of a cent. Not 6 cents, 0.6 of a cent. It got that massive candle up here, came all the way up to almost 9 cents. So we take that as the low to high, and then on the retracement from that, we came down to the 0.5, which was right here, found support, and then continue back up. So now we have on the daily time frame higher closes. Once we closed right here, a higher close, that tells you potentially get back into this asset, on a pullback or whatever, because it's extremely bullish. We now have a higher close. We would expect continuation back to retest the all-time high, which is what we did. We're now back at the all-time high, and then you'll see once again I have our Fibonacci from the top here to the bottom of that little 50% pullback at 2.2 cents. And then from there, that will take us all the way back up to the double top right here, which we hit. We're now consolidating at the top of the range at resistance. Typically, when you hit a target and get rejected, it's a strong rejection like that, and then you might come back to retest it. If you continue to consolidate at that top point like that, at a resistance point like that, or if it was in a downtrend, if you consolidate like that at a support and don't get powerful rejections, that tells the market that you're eating away at those sell orders and you're going to burst to the upside. So this looks very bullish to me. Next target would be the 1.236 up here at 12 cents. So from 8 cents to 12 cents, that's another 50% gain. That looks extremely likely right now to me. Next would be, but obviously if Bitcoin just starts dumping or whatever, that's not going to get hit. So be careful. Next would be the 1.382 at 15 cents, followed by the 1.5 Fibonacci extension at 17.4 cents, and then the 1.618 is at 20 cents. 20 cents from 8 cents is a 2.5x, 2.5 times your money, and then obviously 2.618 Fib extension up here is 81 cents. That is a 10x from the 8 cents that we are at right now. So what would I do in this situation? If you bought Dogecoin at, let's say 4 cents, and it's at 8 cents now, you could take half of it off the table, put it into Bitcoin. If you bought with, say, $1,000, you could take $500. Now you have $2,000. You take $1,000 off the table. Now you have zero invested in Dogecoin, but you still have half as much as you had before, $1,000 worth, because it doubled. Take that $1,000, put it back into Bitcoin or wherever you want to put it at, and then let this bad boy ride. Let it run. See what happens with it. You can still put a stop loss in place or whatever, but this is the market's money. It's free money. So, if that $1,000 doubles again, and then you have your initial investment turned to 2,000, you took out 1,000, so you had 1,000, the 1,000 doubled. Now you have 2,000, plus you have your initial 1,000 you took back out. You took out $1,000 and you still have 3x that $1,000, but you protected the initial investment. So now you have $2,000 of free market money. You could take out another 1,000, let that 1,000 that's still in there run, put that 1,000 back in Bitcoin. However you want to do it, but essentially let your winners ride. Go with the flow, stick with the trend, and let this thing make some money for you. And again, right now we're consolidating at resistance at like all-time high levels here, or at least local high levels here. I can't remember. I think this is the highest Doge has ever been. There's no reason to get bearish on this thing. Yeah, I don't know what the previous before it was listed on Kraken. I would have to actually look, but regardless, this thing is clearly bullish. It's clearly extremely bullish. It's trending right now. Everybody's all about the doggy coin. They're trying to shift their overall, fundamentals or whatever. But technically, chart looks strong. When we start getting an 821 cross like this again, you can start paying attention to it, getting bearish on a shorter time frame. If we get a powerful rejection, you can start getting bearish on it and say, oh, we double topped. Until then, looks extremely bullish to me. Stop trying to call the tops all the time, everybody. Then we got silver. Take a look at silver and see what it's telling us. Once again, looking much more bullish than gold is. We made it back. We had the top right here at $30, came down, put in the bottom right here at $21. Bottom again at $21, top again at $30. This is exactly what we were talking about, where basically, this is turning into a channel. We have basically formed now a channel. There's so much junk on here. You can't even see the channel where I have it drawn. But, we basically now have formed this channel right here in yellow. and the top of the channel is $30. The bottom of the channel is $22, and I would expect us to oscillate inside this channel until we don't. And you can see we have found quite a bit of support right here at the center line, at the midline at $26. Then we found resistance at $26. Then we found resistance at $26, came back and found resistance at $26, came all the way to the top of the channel, came back down to the center and found support at $26. So what does it look like is going to happen right now? We always talk about this. You go from the top to the bottom, back to the top, and then are we going to come back down to the midline and then move back to the top? If we do, it's going to look likely that we break out to the upside from that 30 target, from that 30 resistance and continue on. We hit our target for this triangle right here breakout. The triangle right here in red with the yellow bottom, we have not hit the target for. The measure move on that is going to take us up here to $33. But as far as I'm concerned right now, we are above the resistance here in red, basically consolidating. So if we stay up here, what I like to see on these things is not just a close above it. I like to see a close above it and then an open above it and then this candle close above it too. And if this candle closes above it also, I will get extremely bullish. So if we close above this thing in 9 hours and 42 minutes, I will be extremely bullish. And this is exactly my point right here of why you wait for that. Because here we got up to it, opened, closed above it. A lot of people get bearish because we close, or bullish because we close above it, and then we get a massive sell-off. If this would have opened above it, sold off, and then closed above it right here, I would get extremely bullish on it right then. But we didn't. We sold back down inside of it. So this is my point. We close above it right here, get a push up. If this candle maintains and closes above, the top of that channel at $27 today, I will be extremely bullish on this thing once again to come back up and retest the $30 mark, at which point in time I would expect a slight rejection, but essentially to put in another higher low. This was our low at $22 back here. Then we got our low down here at $24.75. Then we got our low right here at $25.28. So at any point in time, we come back down, retest this blue trend line, this ascending trend line support, I would expect it to act as support. So we could come back down here again to the heart line at $26, come back up here again, break out, and then finally find support and continuation. We could get continuation right now up to this Fibonacci level, come back down, find support. But this right here is holding, giving us higher lows, telling us we're in a micro uptrend right now. We're inside of a channel. We are near the top of the channel, but looking at a potential break, if we get a close basically on the daily above 28.93, that's our top right there. That's our top right there on closes. If we come up here and close above, $29 basically, still inside this channel, it's going to look extremely bullish. And I would expect consolidation and then a breakout and that measured move. Once again, if we look at our long-term targets, we've got our fib levels once again. I had this drawn way out. This is from the all-time high. Right now, we got rejected the first time at the 618, the all-time high being $50. We got rejected at the 618, came back down, found support at the 0.5. If we get a push up here again, we're looking at the 786, which is $36.40. After that, the 886, which is $42. And then after that, retest of the all-time high, $48, $50, whatever. And then if we break through that all-time high, let's switch over here again. If you missed my previous video that I made on this, talking about silver's cup and handle formation, this is it. This is one of the most massive cup and handles I have ever seen in my life, which is extremely, extremely bullish. We had touched 50,000 in, 1980 back here. Then we came down, $50. Then we came down to, $4 basically, a couple times, but basically 92. So 1980 to 1992, came back up and topped out again in 2011. So now we have 30 years between tops right here. And then now look, we're approaching to break through this key support, turn resistance. This was support back here. Now it's acting as resistance. If we break through it right here where we topped out, we would expect a measured move first to those levels at 35, then back eventually, through those targets, back to 50. And when we get back up to 50, that's going to look like a cup and then a handle. And then a cup and handle, typically what you see is a rounding bottom on the cup, and then you see a descending channel. When that descending channel breaks, you get the measure move of the descending channel break, which we did. That was our descending channel right here. Came back up. There was multiple ways you could have drawn this thing, but came back up. And then our target from the descending channel break, I think I actually took it off to clean this up just a little bit. But the target from the descending channel break, would be from top of the channel to bottom of the channel. And that would basically give us, the initial move was back up to the 0.5 at $24, which we did. We got that move back to $24. This is when I was telling everyone buy silver, get extremely bullish on silver, $14, $15. I bought quite a bit through here. Obviously, we got that drawdown during the crash or whatever, but that was just a paper drawdown. Much like silver is costing. I looked at silver the other day, and spot prices are, $6 minimum above spot. So if you're looking at $27.50, let's say silver, you're looking at $33.50 to buy it. If you're looking at Eagles, the Eagle spot was like $10 to $12 above spot. So if you're looking at $27.50, you're looking at $37.50 to $40. So $37 to $40 for Eagles. That's almost a 50%, 30% premium for Eagles over spot. So, it's not unrealistic to think this thing is going to break up here and we're going to see realized actual prices on spot in comparison, to what it's actually selling for. But regardless, once you get that initial measure move, consolidate, retouch the top of the channel. How convenient that we topped out, broke out, came back down, found support at the top of the channel, which is what you expect to happen on a break, even though we took out the low and then we got a measure move back up here. Is it possible this fails and rolls back over and goes back into a downtrend? Of course, but, fundamentally looking at this thing, technically looking at this thing, silver does well during inflation and deflation. So it's not unrealistic to think that we're going to come back up here and retouch that 50. And if we do touch that 50, let's look at our targets up here. The initial break after 50, the measured move of the cup and handle, which is, it doesn't look like it right now, but if we take this right here and move it down, because we're in log scale, you see it extends itself like that because it's looking at percentages. So from the bottom at $4 to the top at $50, that is our measure move target. And in this case, the measure move of the cup and handle takes us up to the 1.382 of this move back here, and the 1.382 is at $91. So our first target's 91, the 1.5 is 103, the 1.618 is 122, and then, don't call me crazy here, but, Fibonacci extensions, targets, likely targets for future, it might take 2 years, might take 10 years, might take another 30 years, but the actual target on silver to the upside is $518 is the 2.618. So if we get a 268, or 262% move, we do 2.6 times this move, from top to bottom would take us back up to a new all-time high of $520. What does that have to do with fundamentals? You basically have green energy, you have technology like electric vehicles, solar panels, all kinds of different things that require silver, not to mention like its potential monetary policy. The big difference between gold and silver is gold and silver are both money. Silver was actually money first. Gold and silver were both money, but silver is also a commodity. When gold gets used up, it's valuable enough that, the little bits of gold are recycled from like computer parts or, old broken jewelry or whatever. So the gold never actually goes away. It doesn't end up in like scrap yards. It gets recycled and stays in the actual like supply or stock. Okay, so then the flow is like new gold put into the market. So the stock to flow ratio is what Bitcoin is based off of. With silver, it's the opposite. Silver is consumed and, not recycled. And then also most gold mines specifically are mining gold, as where most silver mines, all gold mines, as where silver mines, it's typically a byproduct of other mines. So you mine gold and then you end up with silver. You mine copper and then you end up with silver. Most silver mines, I can't remember the statistics. I think it's like 5 silver mines in the entire world or something like that. Maybe more than that, but I believe it's somewhere like 5 silver mines in the whole world are specifically like for mining silver, and all the rest of the silver comes from mines that are, mining something else, and silver is a byproduct. So between the fact that it's a commodity, a consumable, it's Now, it still hasn't made it to its all-time high as where gold broke all-time highs this year. Is it unrealistic to think that we make it to $90 and down the line up to somewhere like $500? I think it's completely realistic. And, we are setting up right now for all these crazy conditions in the world for green energy and, growth and, the beginning of a massive commodity bull market. If you look at the price of silver and gold in relation to, Dow Jones or S&P or whatever historic values, right now, gold is extremely undervalued. Silver is extremely undervalued in relation to gold, which is extremely undervalued in relation to the Dow. So therefore, silver is like double undervalued. So is it possible to think we're hitting $500 in the next 10 years? I mean, I wouldn't put it past the market. We're looking at the monthly chart right now and, basically found support on the monthly down here. And another thing, too, people always wonder where I get these moving averages from. These are Fibonacci numbers transferred into moving averages. And the reason I use these is because they're the best ever. No, I've never seen anyone else use these moving averages. The reason I use them is they're the best ever. Look at this price action on a monthly chart right here and tell me these aren't perfect. You come down here, we're at the 200 simple moving average, and interaction with the 200 exponential moving average right here, they're perfect. Look at right here. This is the 50 simple moving average right here. This is the 55 exponential in green right here and the 89. And look what happens. We're finding perfect resistance at these targets. When we sell off down here, where do we hit exactly? We literally hit to the T the 528 moving average. I've never ever seen anyone use the 528 ever in all of existence. And look where silver bottomed out on the paper markets to a T on a monthly chart exactly. So, all the people that use random stuff like the 9 or the 7 or the, 61 or the 90 or the 100, why are they using it? Because these are the ones that work right here. So, and again, these are completely free. All my indicators, all my settings, all my tools are available completely free on TradingView. These are all my numbers. All my settings are plugged into them. All these other indicators are listed down in the description. They're all free to you to use. This is proprietary coding involved in these indicators. Obviously there's nothing to coding moving averages and binary pivots and all that stuff. But, the knife is proprietary code. No one else has this. It took me forever to master this, to be able to get it to, functionally work on a chart with stochastics as well, so that you could see both at once. Because otherwise, if you were using this thing, it was so skewed to one side or the other that the stochastics were not useful. Switching the trader dynamic MACD to allow you essentially to get into long trending trades. These are extremely valuable tools, and I highly recommend that you take the time to go get them for free and use them, master them. I have a trading series, the indicator series. They're older videos. I'll redo them at some point in time. But it's all available for free. These tools are exponentially valuable and will make you exponentially amounts of money in the long term. And if you like the video, if you like the knowledge, you like the TA, the targets, the whatever, you like my voice, whatever it is, I highly recommend you subscribe to the channel. If you want to make a contribution, I accept, crypto contributions, as well as just liking, subscribing, sharing, all that good stuff, guys. I appreciate the comments. Everybody that takes the time to interact with me, ask questions, hype me up, tell me whatever, improve this way. I'm glad you do this. Look at this coin next time. Look at this asset next time. We are about to entering in a, what looks like a 10 to 15 year commodity bull market, in my opinion. And I expect things like silver and copper and all this stuff to go through the moon. And, I will take a look actually at, I'll show you guys a couple of my, traditional stocks that I'm involved in. Love it or hate it, pot stocks. Tilray is one of mine. It has huge, massive upside potential. First Majestic Mining, silver. First Mining Gold, same owners, same company, but, it's gold mine stock. Both those, I think, will have exponential gains in the upcoming bullish commodity market. Uranium, index fund, copper. There's lots of just good stuff out there. You don't have to just go into, a traditional company index fund. You can look at some of these other commodity index funds and do extremely well. Coffee, soybeans, sugar, copper is another one with like the whole green energy and infrastructure. I think it's going to do extremely well because copper is used for everything. Copper piping isn't everything. Copper wiring isn't everything. So if we're going to have to rewire infrastructure to take care of all these electric vehicles, if you have a bunch of emerging markets in other countries, that are going to essentially be building up, like China needs a ton of copper, India needs a ton of copper, Middle East needs a ton of copper, all these things, and then green energy, electric vehicles, all this stuff. There's a huge potential future with this green push and the Green New Deal and all this stuff for like 10 to 15 year bull market in some of these assets. And I highly recommend that you think outside the box. Companies like Tesla are extremely good. Cryptocurrencies like Bitcoin are extremely good. But a lot of them have already had massive moves. So you now look at those commodities in relation to these various stocks or cryptos and say, okay, let me buy the stuff that's undervalued right now. Let me buy it while it's not moving, and then next thing you know, it bursts to the upside, and then I can take profits and go back into some of my other stuff. And that's called diversifying your portfolio. But look for things that are in an uptrend. Look for things that are above the 200 moving average. Look for things that have a positive slope on the moving average. Look for the shorter time frame moving averages like the 8 and 21 to cross to the upside. That's how you get in these amazing positions and you ride them to the upside. That's how you get in silver back at $15 and get to ride it up to 30 and double your money on a commodity in no time. That's how you get to buy gold at $800 or $13 and then ride it up to, $2,100. That's how you get to buy Bitcoin at $3,000 or $5,000 or $10,000 and ride it to, $40, $50, $100, $250,000. You buy these things while they're undervalued, but you buy them when they're in confirmed uptrends. And, the best way to tell, in my opinion, is moving averages. And then, obviously, you can see once a trend starts going to the upside on a longer time frame, moving averages are in line. Multiple things are lining up. You have multiple levels of confluence. You start dabbling in those markets. Dollar cost average into an uptrend. Because if you bought through here and you just went all in, and then, all of a sudden silver massively sold off from 1660 to 1160, you were probably scared. But if you were dollar cost averaging into an uptrend while we were above, really we were below the 200 back here again. But if you started dollar cost averaging again when we got back on top of it and then it dumped, you just got a better price into a confirmed uptrend. And continuation, and you're doing great. And as we come up here to higher and higher prices, don't think I can't buy now. Prices are too high, prices are too high, prices are too high. And then next thing you know, Bitcoin goes from $20,000 to $50,000 and you didn't buy because, you were afraid prices were too high. No, it's the other way around. Don't think through here, I'm going to buy the bottom. I'm going to buy the bottom. I'm going to buy the bottom. I'm going to buy the dump. I'm going to buy the next dump. I'm going to buy the next dump. I'm going to buy the next dump. Because you run out of money in a downtrend like this and you're constantly just going negative, 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 negative. As where if you just buy into an uptrend, you're constantly just going positive and you just dollar cost averaging, slowly buy into an uptrend and you're just more positive, more positive, more positive, and you don't have that resentment. You're not taking a drawdown. You're just constantly, in gains. And that's what it's all about. Trading with the trend. That's what this channel is all about. And that's what this video is all about. So stop trying to pick tops and trade with the trend, ladies and gentlemen. Crypto trend trader. This is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly, and I'm out of here.